Good morning. Hello and welcome to today's morning market call. My name is Ian Joseph, lead market analyst at HFM. A quick disclaimer is this is just for educational purposes. None of this information should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry about that. I'm here to help you maneuver the financial markets. Today is going to be a very interesting day, looking at what we are anticipating, starting off with idea generation, whereby looking at the stock heat map. Remember, we do have earnings and we do have a lot of news releases up this week. But most of the times, whenever you wake up in the morning, you need to start with the HFM website. Remember, we have only a few days to the end of someone is going to walk away with a brand new Mercedes. Not only a Mercedes, we are going to give out 10 iPhones. We are going to give out trading stations, and the pièce de resistance is going to be one Mercedes C-Class, zero mileage, and the only requirement is for you to trade. Remember, we only have 3 days to the end, whereby we are going to host a live session and we are going to give out the cash prizes. We are going to give out the prizes. Basically, it's 10 iPhone 16s, 5 trading stations, and once again, the pièce de resistance, the Mercedes C-Class. Now, whenever I wake up in the morning, this is usually I start out my day. Click on this. There's a lot of information. There's a lot of tools available for you as a trader on the HFM website. Starting off with the economic calendar, we are going to stay here for quite some time. This is whereby we do generate those ideas. This is what is going to be guiding you, looking at opportunities in the financial marketplace. Now, looking at today, we do have activity. We did have activity actually in the morning, whereby New Zealand did release their PPI numbers, and it actually came out lower than anticipated. And we shall go into the charts, look at what this data means for us and for the assets that we are going to be looking at today. We are going to be looking at the specific currency that it's going to affect, what the commitment of traders has to say about it, and what the charts have to interpret that information. But looking at exactly 1:45 a.m. today in the morning, we did have PPI numbers for the New Zealand, and this is the second quarter of the year, whereby the numbers once again did come out lesser than anticipated. The forecast was actually 1.0. The previous number was 2.1, but the data actually came out lesser than forecast at 0.6. The Westpac consumer confidence also did come out at 5.7. Now look at the bar. This is medium impact anticipated. Now the highlight of the day in the next 5 hours, 24 minutes, is going to be about the Canadian dollar, whereby we do anticipate their inflation numbers, especially the CPI, and we'll want to look at the year-on-year release. As you can see here, we do have a red bump, meaning this one is going to be high volatility expected. The consensus is we are going to see inflation cool down to almost 1.7%. The actual number has not yet come out, and we will want to see if the prices do come out. If the consumer price index does come out positive, it means that we are going to see a strong Canadian dollar. But if the numbers do come out lesser than 1.7, there's a high possibility we might see it as a bearish reading. Looking at the consensus, we have seen CPI numbers, inflation numbers coming back. This was back in 2022, whereby we did have the peak. This was just after the markets came out of COVID. Inflation numbers was around 8.4%, but currently we are cooling back down. And this is what the central banks would want to see: inflation below the 2% region for them to justify interest rate cuts in the near future. That's going to be the highlight. And we want to switch gears over to the charts. Look at, okay, what should we be anticipating? If I can go back here, once again, we do have earnings this coming week, and you can come to the tools and education. You can come to the earnings calendar. Remember, once again, we do anticipate earnings for big, especially retail sector in the United States of America, which is due to come out in the next. For Baidu, it's going to be tomorrow. Walmart, we have Salesforce, HP, Nvidia, which are due to come out very, very soon. And we do anticipate that there's going to be volatility, especially on the retail sector, whereby all eyes could be on Walmart when the numbers, their earnings per share estimate, we do have the forecast at 2.63. Remember, once again, this information is on the HFM website. I want us to go to the super charts. Look at the charts, and starting off with the Canadian dollar, let's start with the New Zealand dollar. The US dollar again is the New Zealand dollar. I am looking currently at the 30-minute time frame. And once again, we do have a very interesting piece of price action happening at the moment, whereby the markets has been consolidating. We are in a very tight range. As you can see, this was last week, Wednesday, whereby the markets did aggressively push to the upper side, whereby the New Zealand dollar did gain against the United States dollar almost 1.4% in less than 1 day, 2 hours of trading. But then the markets did give back to what had been gained, and then the markets entered a period of consolidation. Now for today, the data did come out at exactly 1:45, and if I can go pinpoint where 1:45 a.m. it was around this particular region here, and as you can see, we are still in a channel. We'll want to see how prices are going to react if at all we do break out of this consolidation region. Whenever prices are consolidating, this means that the markets are gearing up for the next move. Remember, the markets usually moves by impulses and corrections, impulses and correction. So whenever you do see a correctional phase whereby the markets are not making highs or lows, it means the market could be gearing to either break up to the upper side or break to the lower side for a further continuation. So as a trader, this piece of price action is very, very important for you to look at, because this means that the market could break out in the near future. If I could have zones, we do have a region of support around, let me remove this, we do have a region of support forming around 0.59105. Now looking at support and resistance region, this is where the market usually moves from regions of liquidity to regions of liquidity. We will want to see how price action is going to behave once we do break either to the upper side, whereby if we do break to the upper side, there's a high probability we might see prices continuing with a move further to the upper side. But on the other hand, if we do have price action breaking to the lower side, this means that we might anticipate price continuing with the trend, looking at the overall direction of the market. Remember, once again, as a trader, our biggest goal is to react to price action. No one knows what's going to happen next, and as a trader, you will want to have the probabilities in your favor. Once again, the highlight of the day is going to be the United States dollar against the Canadian dollar. Here you are, darling. And wow, looking at price action, I want to see it on the 1 hour time frame. Very interesting piece of price action, whereby we did have this massive impulse from this low to this high, and then the markets did retrace. If I can pull a Fibonacci from this low to this high, you can see the prices have been respecting the 50%, the golden retracement region on the Fibonacci level, which is quite interesting, whereby we had a massive beautiful touch on the 50% level, and the markets have been trading above that region. Now currently at the moment, we are seeing higher highs, higher lows on the United States dollar against the Canadian dollar, but this could be bound to change. Remember, if the data does come out negative for the Canadian dollar, we do anticipate prices to continue moving to the upper side, while on the other hand, if the inflation numbers do come out positive for the Canadian dollar, we do anticipate prices to continue moving to the downside, possibly coming back down to retest the 50% region, which is going to be around 1.37249 on the Canadian dollar. Very, very interesting piece of price action. Now, we could anticipate before the news release is a lot of prices in consolidation. As you can see right now, prices have been ranging, whereby we have had a bit of manipulation, whereby this candlestick, let me remove that, we did have support forming around this region, and the markets did come back, grab liquidity on these relatively equal lows. And this candlestick is very interesting on how it formed, whereby it did break the lows around 1.378, but closed above, and then the next candlestick that did form, the subsequent two candlesticks that did form, actually went to the upper side and also grabbed liquidity around these highs. Now this is very normal, especially before major news releases like what we are anticipating today in terms of the Canadian CPI. It's going to be the inflationary numbers for the CPI, whereby the markets did break to the upper side, but before the day did end yesterday, the markets did close back inside the range, which is quite anticipated in the financial markets. This is a very good strategy called the accumulation, the manipulation, and the distribution, whereby the markets usually moves in three phases, whereby the markets impulse, correction, then an impulse either to the upper side or to the downside. Once again, some people can call it the ABC movement, whereby this is the A, the B, and then the C movement, or the accumulation, manipulation, then finally the distributional aspect of the market. And this is what we are seeing happening in the markets currently at the moment. We will want to see if we do break to the upper side, there's a high probability that we might continue moving further with the trend, which is currently bullish when you look at it on the 1 hour time frame. But if the data once again does come out negative, we might see prices breaking to the lower side, possibly coming back to fill in these inefficiencies around. We do have another block around this region. This was the last candlestick before this massive move. Maybe prices will come back, retest this region, for a further continuation to the downside. I would want us to look at the commitment of traders. So this is whereby I go to the CFTC. Now, the CFTC is a very good tool that I usually like looking at, looking at how institutions are pushing money. So the COT data, let's go to the CFTC. For currencies, you'll want to go to financials, okay? And we want to switch to so the first one actually is the Canadian dollar in this category here. So this is the commitment of traders report. Don't worry about it. It might look intimidating, but it is not, trust you me. Now we do have categories of the dealers, asset managers. We do have the leveraged funds. We do have other reportables and the non-reportable positions. Now you would want to focus on the asset managers and the institutions. This is where the big money is. Now looking at the general positions in the markets, looking at the overall positioning, we do have the long, the shorts, and the spreads. You will want to pay attention to the longs and the shorts. Looking at it currently at the moment, there is a lot of positions in the market whereby there is 103,000 net short positions, 103,000 net short positions, and 32,254 net long positions in the markets. Now, this means institutions are favoring more selling opportunities on the Canadian dollar compared to buying opportunities. Now, for traders, this is going to give you the overall direction of the market. Looking at it, this means institutions once again are favoring more selling opportunities. And looking at the chart, looking at price action, if I can go to the higher time frame, if I can go to the daily time frame, you can see that of late we have been seeing prices move to the upper side on the daily. Ever since June 16th, prices have been moving to the upper side, meaning the Canadian dollar has been weaker. And if you can switch it over to a larger time frame, prices of US dollar against the Canadian dollar has been buying. This is the result of the net long positions that institutions do have on the Canadian dollar against other assets. But going back here, what you will want to focus on is the changes. We can see from August the 5th till August of 12 till 12th of August, institutions offloaded 37 net long positions, but at the same time, interesting, they did add more than 7,185 net short positions. Now going back to the chart from August 5th till August 12th, let's look at what happened as a result of the price action. This is United States dollar against Canadian dollar. Don't forget about that. Now you want to focus on August 5th. It was around this particular region here. So from August 5th, we did see institutions offload some net positions, net long positions, exactly 37 net long positions, but they added more short positions. So if I'm looking at US dollar against Canadian dollar, if I'm looking at USD CAD, this means if the Canadian dollar, if institutions are shorting Canadian dollar, you anticipate prices of the dollar against CAD to move to the upper side. And we have seen prices make higher highs, higher lows, meaning institutions are favoring more selling opportunities, possibly could prices move further to the upper side. And this is how you piece in the information of the commitment of traders into your analysis. Remember, as a trader, you are trying to look at adding more probabilities to your bias. Remember, in the financial markets, you can either buy or you can either sell. And as a trader, you want to look at how many tools in your arsenal can you have to enable you find higher probability setups. Now, this is going to be the Canadian dollar. We'll want to look at the New Zealand dollar. So if you want to look at if you want to find an asset, you hit Control F if you're using Windows, or Command F if you're using an Apple device. We want to look at NZD, so I will switch it to NZD, and then this one is going to pop up the NZD. So this is the category for the New Zealand dollar currently at the moment. Now this is from the CME, okay? This is the Chicago Mercantile Exchange, which is one of the biggest exchanges in the United States of America in terms of derivatives. Once again, you want to focus on asset managers, and as you can see here, we only have net long. We do have 11,314 net long positions and 14,993 net short positions. Now, the differences between the two is almost 3,000, but you want to focus on the changes once again. Looking at the changes, institutions from August the 5th to 12th of August, they did offload 139 positions, but at the same time, they did add almost 1,729 net short positions. So if you can go to your charts, this is how you interpret the information. Pick an asset that has the NZD USD to it. From August the 5th, which was somewhere around this region. So I'm looking at the 1 hour time frame. August the 5th, which was around this region here, somewhere around this region, we did see prices move to the upper side, but we did have these massive selling opportunities. So from August the 5th till 12th of August, we did see prices struggling to go to the upper side, but we had this massive move to the downside, whereby it did give back what it did gain over the past. Now remember, a mentor told me that bulls usually take the stairs, bears go out the window. We can see that prices did gain almost 1.34% in 8 days, 14 hours, but all of this was given back in the financial markets in less than 1 day, 8 hours. And this is the result of institutions buying and selling. And it is very important for you to look at the commitment of traders. It is important to look at all the tools in your arsenal at your disposal to enable you find higher probability setups in the financial markets. I want us to switch gears to the precious metal gold. Gold has been very interesting of late. This was yesterday's analysis, and if you can just start it over, have a cleaner chart. Let me just remove everything here so that we can have a beautiful chart. Once again, prices has been moving to the downside ever since this was towards the end of July. Prices did come and make a low around $3,266 an ounce, but we did have massive buying, and this was the result of the NFP. Remember, the NFP did come out negative for the dollar, especially on the revisions, whereby the revisions number did come out actually 14,000 jobs, which is quite low in an economy of more than 300 million people. Only 14,000 jobs is a drop of blood in the ocean. And the markets digested these data very negative, and we did see massive buying on the precious metal. Looking at a Fibonacci tool, a Fibonacci retracement tool, if I can have it from that low to this high, as you can see, once again, prices has been consolidating around the magical retracement region, which is in between the 61.8% and the 50% region. For the past 8 days, prices has been consolidating in that region. Prices could wait for a catalyst. Now, Zelensky and Zelensky and Trump did meet in Washington, and Putin was on the other side of the call, and talks could be positive, where there could be a ceasefire, there could be a redrawing of boundaries. There were European leaders, 7 European leaders to be exact, present in the meeting. And if at all we do have a breakthrough with the peace talks, this means that the precious metal could continue moving further to the upper side. We might see the commodity aspect of things moving to the upper side. Why? Because when you look at Russia, Russia is a large, has a very big geographical region, and they're rich in minerals, they're rich in resources. Now, ever since February of 2022, if I can just go back in time to put it into perspective, let me go to a weekly time frame and switch it back to February of 2022, which was somewhere around this region here, whereby it was actually this candlestick. I shall never forget that candlestick, how it looked like. This was the specific candlestick which was around 21st of February. This was when Mr. Putin decided to enter into the neighbors, and the markets did gain in less than 3 weeks of trading. Gold surged more than 10% from 1,888 to 2,077. And ever since, the markets have been buying and buying. No one anticipated gold prices will move to this level where we are currently at the moment. Now, if the peace talks do continue in a positive direction, this means that resources in Russia will be put to the open markets. Remember, whenever you're having a war, you will be sanctioned, because if you do have resources that you're selling, but the money that you're getting is going into war, it's not humane for countries to do such businesses, because they do believe that the money that they are giving you, yes, it's business, but your money will be used to harm other people. Now, this is what happened with Russia, whereby they were sanctioned. A lot of things that they do have within their possession, especially the commodities, were not allowed to enter into Europe, were not allowed to enter into the United States of America, and we did see prices rally to the upper side. Once again, if we do have a breakthrough with the talks that are currently ongoing, we could see a war that has been ongoing for the past almost 3 years right now come to an end, and the markets could take this data positively. Remember, it's always supply and demand, meaning if the supply is going to be opened up in terms of the resources, this means that we might anticipate prices of gold moving further to the upper side. The same could be said with oil prices. Looking at it where we are currently at the moment, the markets are digesting this information really positively, in the sense that if there is a breakthrough in the meetings that are currently happening, and the sanctions are lifted against Russia, we could see the commodity, the prices of oil continuing to move further to the downside. Currently, we are trading at $62 a barrel on black gold, meaning if, once again, it all depends. If there is a breakthrough, currently at the moment, nothing has been settled. Currently, nothing at the moment has been confirmed. But if there is a breakthrough in the financial markets, we might see oil prices, if we do break these lows, the lows around $60 a barrel, this could mean that oil prices will move to the downside. Now, oil is very important to inflation, because if oil prices do rise, there's a high probability everything will follow into suit, because oil is a very, very precious commodity that enables the economy to sustain itself. Because when you're looking at oil, goods and services, for materials to move from one place to another, there is a high probability that you're going to use a lot of oil. You have to fuel vehicles. So if oil prices move to the downside, this could be passed to the consumer, whereby it could reflect lower prices in terms of inflation. But if there is no breakthrough and the geopolitical tensions continue, right now at the moment, Iran and US had cooled down. If you look at oil prices, when there was a massive invasion in Iran, we did see prices of oil make a high around $75 a barrel, which was quite interesting to note it around that particular region. But we are cooling down on the oil prices, and this is very interesting to note, especially for us as traders. Remember, for these sessions, we are going to be looking at ideas. What are some of the things that you need to be looking out for in the financial markets? Looking at silver, similar occurrence. Prices are holding support that we did look at yesterday, and we did mention that if we do have this region of support holding, we might anticipate prices of silver moving back to all-time highs around $38.7 an ounce. The dollar index yesterday did gain almost 4%, which was quite interesting. But looking at it on the day, we have actually come back down, meaning the markets are taking this information positively. The talks could be positive in the near future. Looking at equities, starting off with the S&P 500, yesterday's candlestick did close with a doji, whereby we had larger shadows compared to the bodies of the candlestick. And this is very anticipated because remember, once again, we do have the Jackson Hole Symposium later on in the week, and the markets are waiting for Jerome Powell. What do you have to say about interest rates in the near future? Currently, at the moment, we are still holding this very, very important level around 6,442 region on the S&P 500. The Nasdaq, similar occurrence. Remember, today is the second trading day of the week, meaning if I'm looking at the weekly perspective, we do have less than 3 days, 14 hours of trading to go, meaning this candlestick could close either bearish or bullish, depending once again on the data that will be released later on the day. The Dow Jones, once again, similar price action, whereby we did see this candlestick of last week breaking region of resistance and closing below, meaning once again we want to see how this candlestick, remember, looking at it on the weekly perspective, we do have 3 days, 14 hours of trading to go. And if Jerome Powell signifies or hints at interest rate cuts in the next session, which is going to be in less than 29 days, looking at the CME FedWatch tool, if I can just take you there, in the next 29 days, 10 hours to go, we want to look at the changes in the percentages of, currently at the moment it's at 83.6. Now the data is actually from yesterday's live session, and these percentages usually change during the course of time, whereby the markets usually look at the probabilities of, are we going to see an interest rate cut, or are we going to have a hold on the interest rate cut? Now currently at the moment the consensus is at 16.4% chance that we might have interest rates where they are currently at the moment, which is in between 425 and 450 basis points, but there's an 83.6% chance that we might see an interest rate cut in the next session. Looking at 29 October, the statistics also could be visible, whereby there's a 7.9% chance we might have interest rates where they are currently at the moment, and a 47.7% chance we might have a 25 basis points cut, or a 44.4% chance whereby we might have actually a 50 basis points cut in the next meeting, the subsequent meeting after 17 September, which is going to be 29 October 2025. And the markets are currently digesting this data. We might see institutions, investors starting to plan this out as early as now. The Russell 2000 has been gaining, especially after we did see the markets tank ever since Trump did take office around January when he was sworn in. Actually, after he did win the elections, we did see equities tumble to the downside aggressively because investors were not sure about what the implications of tariffs are going to have in the financial markets. We did see the Russell lose almost 30%, which was considered a market crash by many. Remember, when the markets do move by 30%, it's often considered as a market crash. And this is the result of the markets looking at the, okay, what are tariffs going to have as an impact on the markets? But afterwards, we had the best gain in 10 years in the markets, whereby the markets did recover 34.43% in less than 126 trading days, which was one of the best, once again, one of the best recoveries the markets has ever seen in 10 years. The FTSE has been doing good, especially after breakthroughs in terms of trade deals between America and the UK, whereby the UK is going to benefit a lot, especially on their industrial side. Remember, whenever you're looking at Britain are really good in terms of manufacturing. They do produce a lot of good good machine equipment, including Rolls-Royce. Rolls-Royce are going to be one of the biggest benefactors as a result of the trade deals that did break through between the United States and the UK, and we did see the FTSE digest this information very positively. Once again, the FTSE did gain almost, this was quite significant from the lows back on the start of April 2025 to where we are currently at the moment. The FTSE did gain almost 22.62% in less than 133 trading days. And could there be more where this came from? Only one way to find out. I would want us to look at currencies, especially on the Eurozone. Looking at the euro against the USD, we did have this massive impulse, but within the impulse, we did have impulses and corrections whereby the markets have been making higher highs, higher lows, higher highs, higher lows, higher highs. And currently we are in this region of support whereby the markets did hold around the 1.13954 region, and the markets are currently trading above that. But looking at the previous price action, looking at, okay, sorry about that. Looking at the previous 49 days of trading, the markets have been in consolidation, whereby we are waiting, the markets investors are waiting for what could happen next. Are we going to see interest rate cuts for the United States dollar in the upcoming meeting? If we do see that, then it means we are going to anticipate a weaker dollar, meaning the euro against the USD is going to be stronger, anticipating prices would move to the upper side. But currently at the moment, the markets are in an indecision period whereby they're neither making higher highs or higher lows. The markets are actually consolidating around that particular region. GBP USD, a similar instance could be said, whereby we did have this massive impulse, whereby we did see the bulls were in control of the market, but we did have this short-term retracement, and the markets are gaining back what they did lose over the past 1, 2, 3, 4, 5 weeks of trading. Currently at the moment, we do have less than 2 weeks of trading for the monthly candlestick to close. Then the next monthly calendar is going to open, and we will want to see how the month is going to conclude on the currency pairs. Is there any currency pair that you would want us to look at? Let's switch over to any questions. If you do have any questions, I would like to interact with you on Instagram. Mr. Coach Hesbon Basweti, nice to meet you. Nice to meet you. Pizu. Help me, guys. I'm just 17 with a dream to be in the 1%. You are on the right trajectory, Davey. At 17 years, I was lost. I was so lost. And if you are thinking about being on the to be in the one about, like, if you're thinking about it right now, then you are already on the right trajectory to be in the 1% as early as now. Just stay locked in, as no man is limited. No man is limited. Yeah, join the club, brother. Which strategy do you think is best? So, this is a very good question. That's a really good question. Which strategy do you think is best? Everything works. It just depends on the person who's applying it. Everything does work. So all strategies work. It just depends on you as a person. Because I can give two people the exact same strategies and I'm going to get two different results. So it's not the strategy, it's the person who's applying the strategy. That's going to be it for me. I shall see you in the next session. Take care of yourself. Stay safe. Once again, may God protect you. May your enemies respect you. And may death neglect you.